In a previous article, I hypothesized that, if the US-China trade war were to happen, China would come out of it much better than the United States. My argument was based on economic and social factors that gave China an advantage over the US. What has unfolded since has been tariffs on key Chinese and US exports in a tit-for-tat encounter. Overall, the US as the instigator was on the offensive and all China had to do was resist. And it did, which meant this endeavor has been a big loss for the US. Fast forward 17 months and there are many events now plaguing the unstable US administration. These include key personnel in the administration either departing or being censured, in addition to the many political and personal witch hunts. In China, the backlash against the ban on U.S. shipments of vital components to ZTE from American suppliers has seen much of the public standing firmly behind Beijing. Coincidentally, ZTE has now been offered assistance by the U.S. administration, which can be understood as a veiled mea culpa from Washington. Watch, Trump vows to help save Chinese telecom jobs. China seeks tips from Japan for handling top U.S. trade haggler. The optics in this trade war are also an important indicator. The one of significance was the U.S. trade team visiting Beijing as an indication of the balance of power. This can be interpreted as the weaker party traveling to seek a truce. Another optic to consider is China accepting some of the U.S. demands, which is not a sign of weakness. This is fairly common in Chinese dealings where agreements are considered malleable, and is very much in line with the Confucian philosophy. Those experienced in China business know this well. The U.S. trade team visiting Beijing can be interpreted as the weaker party traveling to seek a truce. However, this trade war is not over yet, and one can expect the next flare-up to be greater in intensity. In the meantime, the U.S. is more than likely to go back and revise its trade war plans while the Chinese analyze and insulate their weaknesses. North Korea, Syria, Iran and domestic pressures will all weigh heavily on a U.S. administration that is now forced to make America great again. Overall, the signs point to a retreat by the U.S. for now. There have been several effects of the trade dispute. On the U.S. side, the first is the cracking of the Trump Code for negotiations. This begins with accusations and threats. Those that capitulate go under while standing your ground results in dialogue. Kim Jong-un is a case in point. Second, China exposed the U.S. many weaknesses, especially its agricultural exports. Overall, this can be detrimental to the U.S. as its reverberations will have an impact on low-income consumers who cannot stomach another financial shock. These consumers are the base for this administration and will cause major headaches going forward. First stop, Russia. Why Wang Kashan is heading to St. Petersburg. China seeks tips from Japan for handling top U.S. trade haggler. On the Chinese side, the trade war has also exposed significant weaknesses. The ZTE saga in China's 2025 initiative showed just how dependent China is on high-value imports for its future ambitions. However, by targeting certain industries and initiatives, the Trump administration has let the cat out of the bag. With the possibility of a new trade war, Chinese authorities will most likely focus on developing these industries domestically, but now with a greater intensity. At a global level, expect the U.S. to also try and influence its allies to assist with its trade war. Though the same strategy is being employed against Russia, these allies will be forced into choosing between politics and economics. This is already playing out with the European Union's position against U.S. demands to halt trading with Iran after its decision to pull out of the nuclear deal. If it comes to this point, expect the U.S. to be isolated. This will happen even with its closest allies and will take China closer to overtaking the US economically. George Marano is a PhD student at RMIT University, Melbourne, Australia, researching international business and strategic management.